The federal government has frozen risk adjustment payments. We'll talk about what that is and what it could mean for premiums going into 2019. Risk adjustment is one of the 3 R's. If you think of the Affordable Care Act's premium stabilization programs: reinsurance, risk corridor, and risk adjustment. Risk adjustment was meant to be permanent as instituted in the Affordable Care Act, whereas risk corridors and reinsurance were temporary programs to help stabilize a brand new population coming into the marketplace for the first time. The realization was that when you have a lot of newly insured people in the Affordable Care Act marketplace, some plans will have a sicker risk pool, some insurance plans will have a healthier risk pool. There was meant to be a balancing among those plans to compensate the plans that were a little bit sicker or had higher risk. Risk adjustment was one of the ways that plans would pay other plans to balance risk. Now, the payments would transfer from health plans to the federal government that would then compensate the plans that had the higher risk. The Affordable Care Act directed the Department of Health and Human Services to create a formula to make this happen. So they did. They created a very simple formula that said, we're just going to use statewide averages of premiums as our basis for determining how to spread risk. That, as you can imagine, created a stir right away. They didn't use each plan's premium. They used statewide average premium. So plans started saying, hey, we're not getting compensated like we should. We have much higher risk. The statewide average might be quite low, but our particular plan has a very sick population. They're very expensive. We should be compensated more. The Department of Health and Human Services said, well, we picked the statewide average model because we're working under the assumption that this has to be budget neutral. That, again, is where argument comes in. Is that written into the Affordable Care Act? Some will say, no, it's not. That's not an assumption that they actually need to follow. So this goes to court. 2 different courts have already weighed in on this. A district court in Massachusetts, they said statewide average formula is fine. District court in New Mexico said statewide average formula not fine. They said it's arbitrary and capricious to use that as the standard for balancing risk among the plans. Department of Health and Human Services wants that judge to reconsider, the New Mexico judge, and to vacate that opinion. In the meantime, there's a lot of things the Department of Health and Human Services could have done. We're going to go through those options very quickly, and then we're going to tell you what they did do. So they could have justified their budget neutrality assumption through 2014 through 2017, the years in question here, because they've already done that for 2019. We're not talking about future payments. We're talking about payments that are owed in the fall of 2018 for 2017 plan year. That's the money that the insurance companies will be owed and should be expecting a check soon had this stayed on the appropriate timeline. The Department of Health and Human Services already justified budget neutrality as their assumption for 2019, but they hadn't done so for 2017. And they could have just said, we're going to use the same justification. Yes, this is why we think we should be using the statewide average formula moving forward for risk adjustment. They didn't do that. Now, they could clarify their rationale in an interim final rule. Department of Health and Human Services issues interim final rules all the time. You can go through a public comment period. Insurance plans can weigh in. The general public can weigh in. And it can be a process that works its way through the rulemaking process that way. They didn't do that either. They could ensure insurers receive timely risk adjustment payment transfers for 2017 to 2018 by taking a couple intermediate steps. They also decided not to do that. What did they do? They froze the payments altogether. They said nobody gets any money for 2017. You're not going to be getting a check in the mail for 2018. It's a lot of money. It's $10.4 billion that we're talking about. Now, some insurance plans aren't owed a whole lot, $100,000 here and there. A couple plans are owed a little more on the order of a couple $1 million. Some plans can absorb that, no problem. Some plans are saying they can't, and those are some of those smaller plans, more of those co-op plans that were designed under the Affordable Care Act as well. This won't be made until the litigation is resolved, is the way the Department of Health and Human Services is answering questions about when insurance plans can expect these payments. They're trying to use this as leverage to force a judicial opinion instead of taking these other very logical steps that they could be doing. People are asking, why are they doing this? Because the effect of freezing the payments is to create instability in the marketplace and confusion right at a time when insurers are setting rates for 2019. They're not getting paid for stuff they did in 2017. You can expect that will most likely impact premiums moving forward. What does that mean for consumers? Higher premiums. especially consumers that don't get the benefit of tax subsidies. What does it mean for the federal government, the ones that froze these payments to the insurers in the first place? It means they're paying more money because as premiums go up and tax subsidies go up, that money comes from the feds. So this has a lot of lose-lose impacts going through it. Some insurance plans are saying it's not going to bother us too much, we're okay. You can read some of the sources on this. The press release coming out of CMS talking about why they froze the payments, why the Department of Health and Human Services decided they just weren't going to pay risk adjustment payments to the insurers that were owed the $10 billion. There's also a blog post that goes into a little bit more detail. And you can see if you think this is going to have an impact on premiums moving forward. You can send us an email. You can send your questions at healthwatchwisconsin.org.